How to Survive the Recession, Peter Schiff's Last Warning. In The Real Crash, Peter Schiff demonstrates how the financial crisis of 2008 was nothing compared to what is coming down the road, yet he was ignored by orthodox economists and derided by the media. Peter Schiff is correct again, or is he? How can he claim that the crisis will be even worse than the one in 2008? Hey, relax and tighten your seatbelt. Recession is here to help you out. Peter Schiff, who heads the investment advisory firm Euro-Pacific Capital and precious metals dealer Schiff Gold, has been a regular participant on the CNBC show Futures Now since its debut in October 2012. During these public forays, he has made a slew of bold forecasts, which have attracted considerable media coverage and stoked much controversy. After his latest round of hyperbolic claims on the most recent episode, CNBC decided it was time to look back and evaluate the accuracy of some of his most outlandish forecasts from when he first appeared on the show near the conclusion of its first month on October 25, 2012. Gold will hit $5,000 in a matter of years, according to Schiff. Schiff, like many other notable gold bugs, is a harsh critic of the United States monetary and fiscal policies, believing that they would eventually undermine the currency and cause investors to rush into buying metal as a safe haven. Schiff predicted in October 2012 that gold's got only one direction to go, and that's higher, and that people are going to be amazed at how affordable gold was at $1,700 per ounce. Feeling gold's current costs are high? Well, just wait until it hits $5,000. He thinks we're going to see a huge surge sometime in the next couple years. A year after gold's stunning drop in April 2013, the metal was trading at $1,316, and a year later it dropped to $1,1230. Despite admitting that clearly it's going to take a little bit longer than what he expected at the time, Schiff predicted that it'll move over $2,000 very fast, and that people would be disappointed that they didn't buy gold at $1,700. This was back in October 2014. Instead of swiftly rising, gold has continued to steadily decline, closing trade at approximately $1,060, proving that forecasters were once again completely off the mark. The currency will soon collapse. Schiff detailed his fundamental pro-gold argument, which is that the dollar's value will rapidly decline in comparison to other currencies due to Federal Reserve activities. The dollar index, which measures the value of the US dollar relative to a basket of other currencies, peaked above 80 on that day and hasn't dropped below 78.9 in the time since. It finished near 99, making dollar strength one of the year's most prominent market themes. Meanwhile, inflation has rarely been out of control, with many indicators showing that prices have stayed below the Federal Reserve's 2% target, even as the Fed has ended its asset buying program and, more recently, upped its interest rate target. Schiff has doubled down on his position, telling CNBC that the dollar will crash, only from a higher level, and the collapse will be that much larger now that we've had a huge sucker surge. The debt incurred by the United States will cause a crisis of confidence. The investors would lose faith in the United States' capacity to pay its obligations, which was a direct result of its currency call. Schiff predicted, "We are going to have a true fiscal cliff that we are all going to fall over." Of course, no such catastrophe has occurred, and U.S. bonds and the currency continue to serve as global safe havens, with Moody's rating of AAA compared to Baa2 for Italy and Spain. For his part, Schiff issued a dire warning, saying, "Since my forecast of the impending crisis will likely wind up being just as correct as my prophecies of the 2008 financial disaster, CNBC's criticism of me now will just make the network look all the dumber in the future." Call from Schiff: QE won't help the American economy. Jobs won't be created by the Fed's QE program, but it will help undermine the dollar. Bond buying is now complete, and it's clear that it didn't destroy the dollar, but skeptics are out in force when it comes to job creation. Others argue that there's no causal relationship between QE and economic activity, while supporters of the Fed's stimulus measures point to this as fact as evidence that their actions have contributed to the upward trend. Do you really think that the recession is imminent? Please let us know in the comments section. We hope you all liked our video, and we'll be posting more of these critiques, so make sure you subscribe, like, and share to our channel. And don't forget to press that bell icon too. Thanks for watching.